Imagine, guys, I did a video and I was using the window view for showing my slides, but unfortunately it wasn't showing the actual slides. It was only showing the first slide, like you can see now. But hopefully this video will be my last take on this video, and I hope it will be great because I tried to make some adjustment in my OBS. But let's dive into it. So the thing I said is, like, I promised you a PDF or a PowerPoint format of my simple trading strategy with all the explanations. So I finished that thing today in the morning, but I actually couldn't record it during the day because of some inconveniences, and I live in the hostel. I think you can hear from the backgrounds, some conversations. So I hope they won't override my presentation. But yeah, let's dive into it. So welcome to my simple trading strategy once again. My name is Samurai Trader. I've been doing this trading thing for roughly 3 years and figured out my strategy maybe 4 months ago. I believe it was in November, September. But for those who have been with me since I started my channel, you can see how I've been able to grow as a trader. And yeah, basically that's it. So into my simple trading strategy, I think you've seen this and it's become quite famous. But I decided to make a video myself. From my perspective, from how I see it, and I hope this is going to be a great video because I really need to make this YouTube thing start growing exponentially. So this is another video for you to watch. So my simple trading strategy. Let's start by this line chart. This shows the simplest form of market movement you'll be looking at when you are entering your trades. Most 80% of the time, the market, if it's moving in a correct way, it moves in this way. So what happens is, from this, you can see, and again, I took a pause because there were some sounds in the background. I live in a hostel, so let me try to continue. I hope this won't mess up with the viewers. So the market seemed to be moving low. This could be in New York open. It's midnight open. The market starts moving low into the London session, and then all of a sudden it retraces, making big candles, and then this level is shifting market structure. You actually see in the next slide. Then a retracement into a fair value gap, then to our target. So this could be used as an entry. So this is if we have a bullish bias in perspective. So you can say the same for the bearish markets because the market is run on the same algorithm, either bullish or bearish. This price still acts the same. Yeah, so this on a bearish market moves higher, take out this recent swing high, retraces, making big bearish candles, retraces into this fair value gap or a breaker, then to our target. So let me show you what it looks like on a candlestick level. So on a candlestick level, for the bullish bias, remember this is not the bias, not okay. This is the bias or the direction you would think the market would go. So this, if you think the market is going to be in a bullish direction, on either time frame you choose, you prefer, you're comfortable with. So this is the price movement. So what I'm looking for on a market maker buy model is price or the market dropping to a discount level, or into a high time frame fair value gap, or drop below an old low. That will be my alert for a possible stop hand. I would be expecting higher prices later in the session or later in the day. So what I do is I wait for price to show the willingness to go high. Most of the time it starts creating bullish candles, creating a shift in market structure. When price closes above a recent swing high, like this swing high, so this is my shift in market structure. When the market closes above this swing high, this is signaling. So I was saying, when the market closes above the swing high, uh, above this recent swing high on either time frame, this is my signal for the shift in market structure. So I'm waiting for a favorable gap to be formed, and then price retraces into this favorable gap I named focus, and that will be my ideal entry with my stop loss at the first candle creating the fair value gap. So if you've been following me, you know what a fair value gap is. So 1, 2, 3 is formed out of 3 candles. The middle candle, this is where the fair value gap is. So price retraces into this fair value gap. For someone who's afraid of market leaving, you can enter maybe 2 pips below this week, or in the middle of this fair value gap, and accept that the price will be in drawdown for a little bit until it moves to higher prices. So this is what happens. So this is an ideal place for a stop loss placement. Yeah, this first candle. So again, I will try to explain it. The market was moving low, and then you're expecting for price to retrace, creating a shift in market structure. So this will be a stop hand. So price makes a signature, retraces, closes above the swing high, creating a fair value gap. You enter into this fair value gap, into your target. So the target usually will be some kind of inefficiencies, or you're targeting the premium market if the market was in a deep discount. So what are these inefficiencies? So what is this premium market I'm talking about? This can be a new week opening gap, a new day opening gap, or volume imbalance, or a buy side imbalance, sell side inefficiency. So once again, this strategy works on all time frames. So let's go to the bearish, or the market maker sell model. Once again, price moves in the same direction. You just invert the previous diagram, and you have your sell model. So price was moving higher, moving higher. After the New York opening, price started moving higher, or this can be a New York midnight open. Price moved higher. You see this as a stop hand. First candle was created, second candle, third candle. A shift in market structure as price closed below this swing low, and you enter your sales in this focus. Stop loss above this candle, or if you're too conservative, you stop loss above candle 2. But for me, it's safe to put my stop loss above candle 1. That way I can give my trade room to breathe. So, and the targets, this will be my final target, but you can take your partials after this candle. If you are content with that, you can take your partials in this volume imbalance. That's another inefficiency. That's a CB, sell side imbalance, buy side inefficiency. So this will be your target. So this strategy, it actually comes from the power of 3. So what's the power of 3? I'll talk to you in the next slide. So this is the power of 3 on a daily candle. So what happens is we have the New York midnight open, 00000, New York mid open. So what price does is, from the Asian session, usually in the power of 3, there's accumulation, manipulation, and distribution. So each session, they tend to be some kind of accumulation. So accumulation, you reach the New York open, you have manipulation. Retail traders will try to chase price, thinking it's going down, but you see a shift in market structure, which leads into a distribution, and like from the previous slide I've shown you. So, and you have distribution, then you have market closes 16:15 in the New York afternoon. So this will be a bullish candle. You open low and close high. Then on a bearish day, you open high and close low. You open high and close low. This black candle. Actually, I use these colors because that's the same colors I use on my charts. I don't use red and green candles. anymore. So again, this open, accumulation in the open, manipulation is seen as top hand, distribution, and the New York close. So yeah, that's basically it. And this I just wrote in the bottom some kind of explanation for those who are following with me. So right now let's dive into the real charts from TradingView, what the market will be looking like when you're live trading. So this is an example of the British pound against the US dollar, real price action. So what you see is I've put the power of 3 example here: open, low, manipulation, high, distribution, then close. So what the market did is it opened. This is my midnight open. I usually put a line like this. This is my midnight open. So the market opened, attacked these relative equal lows as stop hand, forming this kind of wick. So some traders will actually chase priced, hoping it's a break, and retrace. They see this as support, so they'll actually chase, well, thinking it will go down. But from the market maker perspective, this is a manipulation. You see this accumulation in the Asian session, manipulation, shift in market structure. The market closed above this swing high and then retraced to the focus favorably gap, enter, and got distributed. This is an easy setup. 1 is to 4.8, but usually I target 1 is to 2. Risk reward ratio. You choose what's comfortable with you. So this was a good day. 1 is to 4.8. So, and for the bearish, I chose to take an example on gold. So again, this is the Asian session. If it's a bearish day, open high, manipulate, close low. Accumulation in the Asian session. This is the midnight open. Still accumulation in the London session. You must start manipulating. So other traders also chase price. But for me, I'm waiting for the shift in market structure. So after this top hand, you see price retracing, closing below this swing low, and creating a favorable gap. So this is my perfect A plus setup. Retraces to the focus favorable gap, enter, and target. So what is my target? This accumulation point was my target. These are relative equal lows, and this can be a target, this can be a target, this can be a target, and yeah, till infinity. So this is basically my simple trading strategy. I know you guys have been waiting for this. For those who follow along with me, you've been waiting for this, but I finally made a video. So if you want to see this, meet in live trading, actual trading during the trading times, trading hours, you're welcome to join my Telegram channel. It's free. It's for everyone. And also like and subscribe on the YouTube channel. We'll be showing trades and trade recaps. But in my Telegram channel, I post some signal kind of trades. So usually I post the signal as we are entering into this favorable gap, as a sign of I'm entering a trade, then to this. So like and subscribe, comment in the section what you want me to be showing next. But I think on my next video I'll be showing you where I am with my funded account, what I've been able to do with it, and how it's going. Yeah, until next time, stay safe.